Manisha, but you have a guest with us. Naveen Mathur of Angel Commodities has joined us. Shoot your questions.
Naveen, what's your sense really coming in for the crude oil prices? Because we are looking at a 5% gain for this week. Are you buying at these levels, or do you think we're pretty much done for the rally for the near term?
Thank you very much, Lata and Manish. I think the markets are stabilizing around $47, $48, $46 level. So it's a kind of very close range where the markets are talking about. I think we can still go in for a buy position on the crude, at least for the intraday, for today's trading activity on the MCX. The contract May can be bought in at around 3060 levels. Stop loss recommended at around 3010. And we are expecting targets in a range of around 3160 to 3170 levels. It's currently trading at around 3095 or so, and internationally also, if you're seeing the $45 level is holding up to a large extent in spite of whatever the news are coming up on the inventory side. So I think intraday technically can be a buy position, at least for the crude oil on the MCX.
Naveen, how are you looking at the metal space, because this continues to be as volatile, and a second weekly decline, does it discourage you from long position here?
Manisha, the trend remains quite weak. I think the trend remains pretty much range bound, but with a weakness into it. The copper is around $4,600 levels, and Indian markets too. We have seen highs of touching at around 335 for copper in India. On the MCX, it's trading right now at around 311, 310. So I think the markets are on the downward trajectory. Up till and unless we don't see too much of economic growth coming out of China, we don't see too much of upside also for the base metals. You're rightly pointing out the steel, the aluminium, everything has been on a short side. So I think overall little bit range bound, but with a bearish trend. Sell at around 311, stop loss 315 for copper, at target at around 304 for the MCX June contract.
Naveen, it hasn't been a good week for the precious metal space as well, down 1.5%. How are you trading that?
Absolutely, Manisha. The bullion prices have taken a beating at around 29,000. They are back up at 29,900, 30,000 levels. So I think the overall reasons are very much known. The kind of upside we saw in the last few weeks was largely because of the depreciation in dollar index, and we also saw kind of a rupee depreciation too, which actually hold on to the prices, not to move on the downside. But overall, I think the trend remains around 30,000 levels. I think 29, 30,000 would be a range-bound trajectory for the gold prices. You rightly said that the dollar index has gained strength. Yesterday it moved up by around 1% or so, which took the prices of the downside. So I think 30,000, 29,000 would be levels where the markets must consolidate or should consolidate at this particular point of time. The strategy to go in for would be around 29,850 to buy in. 30,100 would be the target, and stop loss to be maintained for this trade at around 29,600. Similarly for silver too, we are seeing buying position to be built in at intraday levels for July contract on the MCX. 40,700 would be something where the positions can be initiated for long side. Stop loss 4,400, and targets on the upside can be seen in a range of around 41,500, 41,400 levels.
All right, Naveen Mathur, Manisha Gupta, thank you very much for taking us through some of the key trends in the commodity space and giving us those strategies. We have to take a quick break, but thereafter we are going to get back to stock markets where